Alrighty, good afternoon, everybody. This is Dan Sheridan Mentoring. I'm looking at the market May 6th. Again, I'm looking, just a couple thoughts. The market coming up the last few days, as usual, is being led by the techs. And I'm just looking at just a trade idea. I'm looking at, when you look at these techs, and you can see Apple, which has jumped up here like everything else, but things don't always move straight up. A lot of times things move like an accordion. You say, what does that mean, Dan? I didn't grow up with accordions. Down, up. This is a 6-month price chart. Down, up. A few downs and, down, up, up. You get the idea. The point is, someone may look at Apple and say, hey, I think it could back off for a few days or for a day or something like that. Again, I'm not taking a long-term investor view. This is a little more spec. Hey, I might do a call credit spread, but maybe a little too much exposure with a call credit spread. What's a way to do a call credit spread just very short term for, maybe a few days or for a week, but a little more conservative in case you're wrong. And so here's an idea. If I go May 20, let's go June 5, 30 days out. And the way I would enter it here, and let's say think or swim, I might go buy. It's not as crazy as it sounds. It's like an unbalanced butterfly. And really what it is you're doing 2 credit spreads and 1 debit spread for a little bit to cut down the risk. That's all it is, right? I know it may seem like something from outer space. It's not. So if you look at here, it's all it is 2 credit spreads, 1 debit spread. 2 credit spreads. Why are you doing it, Dan? A little more conservative. What do you mean conservative? Well, if you have a call credit spread, it's a little bit directional and you're wrong and it goes against you, it goes up, hurts a little bit. So this is cushioning the blow. If we go down an Apple for a day, even a day or so, you can still make some money, but it gives you more of a cushion if we go up. A little more conservative way to do a call credit spread. So here'd be an example of one. Let me just throw one together for you. I'm going to sell the 320 calls, a little bit out of the money. Let me just build one here. I haven't done one of these in Apple. Let me look at let's just take a look at this. 330. Is this what I want to do? No, that's not enough credit. Let's look at this. Hold on. 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 No, that's not what I want to do. This may not work in Apple. I'm used to doing these in SPX, this type of thing. Let's just do a call credit spread. I'm going to switch right in mid-mode just because what looks good in SPX doesn't always look good here. So here's 30 days out. And let's just say, again, this would be in maybe the spec part of the portfolio. We're not making a long-term view on Apple. We're just saying it goes up 2 or 3 days. Does it, can it come down? Does it just go one way? No. So let's just look at a call credit spread. And let's say I sell the 320s. All right, here's one. So if you think we're near resistance or we could back off just a little bit, again, just looking maybe for, here'd be an example of one. And let's just say it's going near $1.06, let's say $1.05. Let's just lock that in. So you're selling 1, buying 1, or June 5, so we're about 30 days out. Basic call credit spread. We're selling the 320s, buying the 325s. We're selling it for $1.05 credit. Your total risk on this thing is $500. The difference between the strikes less your credit, $1.05. So that'd be around $4, right? Would be your total risk on the trade. It'd be really $3.95. Would be your risk. Your potential yield to make $1 on 400 would be about a 25% yield. Here's your underlying 302. We're selling the short strike of 320. As long as it doesn't, Apple doesn't go above 320 in the next 30 days, that credit will go to zero. I'd be looking for, if I sold for $1.05 credit, if I get a chance on a down day, if I could buy it back at 50 cents, about 50 cents, I'd make 50, 60 bucks. 60 bucks on 400, right, would be almost 20%, right? It'd be about 15%, right, if we bought it back at 50 cents. And then just on the other side, if it goes up, if it went against me, if I'm looking to make about 15%, if it went against me, if this, let's say, went up to 160 or something, probably get out of it. But again, just looking for a little short-term trade in Apple. All right. Thank you, everybody. Check out SheridanMentoring.com. We have a good $47 trial going on right now, which I think will be great. Can let you navigate through the markets with us. We can teach you the craft. Thank you.